Hi, it's Dwyer. Wealthspinning.blogspot.com. Also, keeping it free.blogspot.com. It is Tuesday, April 4th, 2023. I see the S&P futures. It's about 20 minutes before the markets open. I see the S&P futures are up right now. Looks like it's going to be a positive open. So this is a good time to be a contrarian and to actually talk about a few things. Please don't consider this to be investment advice. I'm just telling you what I'm doing. I'm just sharing my strategy for today, right? I want everyone here to do their own independent research. Let's talk silver. Let me just point out that I know a lot of people online are saying, hey, you need silver coins. You can't trust counterparty risk, right? That seems to be the mantra. If you're actually in the silver coin market, you'll realize that it's a racket right now. They're charging you well north of spot to get a silver coin. In other words, you're paying a huge transactional cost to get a silver coin. What I want folks to realize is that because silver has industrial uses, for example, it's in solar panels, which the ESG crowd wants to tell you is part of the future, right? Because silver has industrial uses, the government is much less likely to seize your silver like they will your gold, right? FDR, former president, actually ordered Americans to turn in their gold in the 1930s. You might recall that that didn't change until the Ford administration in the 70s. Do some research. Right now, while gold is vulnerable to the government trying to balance its own balance sheet, because yes, folks, the debt situation is that acute, just understand that it's very unlikely that they would ever do so with silver because industrialists need silver, right? Let me also point out, too, that if the world goes to hell in a handbasket, and these are the kind of things you need to consider as we contemplate hyperinflation, right? Just understand that an ounce of gold, which is just, a small coin, is going for about $2,000 roughly right now. It's inconvenient to bring a gold coin with you, a 1 ounce gold coin with you to shop for groceries, right? Just understand with silver, it's different. Silver's going for, and I'm just using rough numbers, about $24 an ounce. Quite frankly, it's far more convenient than gold for everyday commerce. So, if you're a little bit of a risk taker, and if you want to avoid paying the huge markup that right now you have to pay from most silver coin dealers, let me just suggest that you take a look at One Gold, which is owned by Eric Sprott, a Canadian billionaire. Very convenient. You can buy silver, but they hold your silver, right? Just understand. You can, of course, withdraw the silver, get money credited back to your account, but just understand your silver reserve is held by the people at One Gold, right? You can pick the country it's held in if you have concerns about holding silver in the United States. But just understand that One Gold isn't going to charge you the big markup. By the way, I'm not a paid spokesman for any silver vault company. Another company I like to use is Vaultoro because I trade in crypto. And Vaultoro allows me to trade Bitcoin, for example, for gold, right? Take a look at these companies. You'll see that you're able to pick up precious metals without paying the huge spot markup. The point I'm making right now, though, is, and again, I'm just telling you what I'm doing, right? I'm a big believer in both gold and silver, but I realize that silver has certain advantages that gold does not have, right? Such as the ease of use in commerce and the lower risks of government confiscation. You want to consider both as you venture into the precious metals. And why the precious metals? Because fiat currency right now is at acute risk. The United States is doing better than most, and even we have an inflation rate over 5%. I would say it's much higher if we were to use real numbers, but we'll go with the government's numbers. Let's just talk about just some brief things I'm looking at. Obviously, I'm very concerned about the U.S. economy. So I am buying ETFs that are shorting parts of the market, right? Just understand, too, I don't know with certainty what the future holds. I'm just trying to bet on scenarios. So the QID, which is a short on the QQQ, right? Just punch in QID, it'll be brought up, right? I'm increasing my QID holding simply because even though the market is set to go up over the next 15 minutes, right? Even though right now it's April 4th, in early April, things look rosier than they've looked recently. I believe that's all temporary. Folks, you don't have a bank crisis. You don't have inflation with OPEC announcing they're going to cut oil production without having problems, right? So the QID is something I'm looking at. Also, with regard to the housing market, understand I'm on both ends of the market, right? If you believe housing is going to bounce back because we're going to pivot toward quantitative easing, then open is something I'm looking at. Understand, I have a long-term option, call option on open, right? OPEN. They're involved in buying houses online. They help facilitate such transactions. They'll buy your home from you to try to resell it, right? Now that works if you believe that the Fed is on top of this, we're going to have a soft pivot and the market is going to bounce back. But understand, I'm also on the other end of the play, right? The SRS, which shorts the housing market, right? You don't have to be completely sophisticated to engage in shorts because now you have ETFs that are inverse ETFs, right? So I have an order in right now for some SRS, knowing that I'm also on the open side of the play. My attitude is housing has to go one way or the other. Right? Now's the time to get very cheap prices because of the uncertainty. Right? Now's the time to get very cheap prices on both. So I'm in both. Open if you believe housing's going to return to bullishness. I'm also in the SRS if you believe housing has another leg down. Understand and look at the big picture. If you believe that credit is going to evaporate because banks are under pressure, folks. You also have a lot of banks right now who had a hold till maturity mindset for their bond reserves, and now they're finding out that, in fact, that's a problem, right? There have been bank runs by consumers, and they don't have the reserves to cover their liabilities. Right? If you believe that we're going to have a credit crunch, if you believe that housing is mostly a leveraged market, most of the people buying houses are doing so on credit, and if you believe that credit is getting more expensive, right? You see mortgage rates rising, then the SRS is certainly something I'm considering. Okay? That's how I see it. Obviously, I like other things, right? Gold, Bitcoin, oil, right? The XOP, for example, the XLE, for example. Um, that's where my mind is this morning, Tuesday, April 4th, 2023. Share where your mind is right now in the comment section of this YouTube video. Understand, don't consider this to be investment advice. You're playing at your own risk with your own money. I'm just sharing what I'm doing. Thanks for stopping by.